Hey, and welcome to another episode of Bite Size Chat. Today, I've got a guest who is going to share something for those who like trading. So if that's you, enjoy the bite and stay with us. Hey, and welcome again to Bite Size Chat. Thank you, Kerry, for joining us today.
Of course.
Thank you.
Thanks for having me.
Yeah, you're welcome. It's exciting because I'm really excited to see the reaction that we get from this. But more importantly, I'm excited to hear all of your knowledge because, we've sat in many places, you've shared with us, and I think it's important that we share with the rest of the world.
Yeah.
Maybe we'll start by saying, who is Kerry Jones?
Yeah. So I'm originally from the United States, from Texas. My wife and I currently live in Los Angeles, and we're here right now visiting her family. And I feel like, God really has us kind of sort of in a missional capacity here. And this kind of leads into a little bit of what we'll talk about later, but part of the reason we're here has to do with trading, has to do with, the topic of the day. So we'll get into that more later. But I'm a software engineer by trade. And about a year and a half ago, I decided to transition to trading full-time, investments in trading full-time. And the reason I did that is because of time freedom.
Okay.
When you have
freedom.
Right. So when you have a job, you have employment, it's a good thing to have. However, you also tend to have a ceiling or a cap.
Yeah.
So, and with that, you also have people telling you, where to be, what time to be there, how long. I like to travel, and I liked the idea of being able to make as much money as I can without a cap on it. So that's why I chose to transition into investments in trading.
How would you summarize what you do?
Let's see. How would I summarize it? I think investing is really, in some sense, being able to predict the future.
Okay.
Now that sounds a little bit sort of hocus pocus, but if we get it down to something more practical, what it really is having a knowledge of what you're trading, the instruments that you're trading in. You have a deep knowledge of that. So let's say if you're picking stocks, for example, you're going to do a lot of fundamental analysis.
Right.
You're going to see who's on the board of that company. Yeah. What are their financials? How much debt do they have? These kinds of things. This will help you determine where that company might be going. So when you've done your homework, your ability to predict the future becomes a lot more honed in. Yeah. Yeah.
And how long have you been doing this for?
So I really took an interest about 9 years ago. I opened up a Scottrade at the time, was the company's name. I opened up a Scottrade account. And I did that because I knew I needed to invest. I needed to, we all kind of realized we needed to do investments. Most of us don't know really how. And that was me at the time. I had no idea what I was doing. But I wanted to get started, so I opened the account. And it was a few years later, probably 2 or 3 years later, Scottrade was bought by TD Ameritrade, and they put into their platform this education section. Right. So I noticed that they had options trading. So I took that course, and what I discovered in taking that course is that this is doable. I can actually do this. This makes sense. What I'd been hearing, this really complicated topic, this high risk type of trading, now became accessible. Yeah. I understood some of the math behind it. I understood what the component parts were. Yeah.
For someone who's listening, not sure what this is about, what is options trading?
Yeah, so options are effectively, it's one way to look at them is like an insurance contract. So let's say you have you own a stock, and then let's say for whatever reason you think that there's danger of that stock going down, and not just going down, but going down sharply. So one thing you can do to hedge that position is to take a put option. And what that'll do is it will allow you to select a strike price. And if that stock does go down, you can actually sell the stock at the strike price.
Okay.
Typically, that strike price is set, somewhere around where it currently is.
Right.
Another use of options is speculation. So let's say you think that a price on a stock is going to go up. You can actually take out a call option. And if it does go up, it allows you to purchase the option at that price and then sell it, basically pocketing the difference.
Right.
So that's really what options are. Is they're also an instrument that has leverage. So stocks are really kind of linear in their math. Options allow for more versatility.
Right. Okay.
Yeah.
And doing this, how long you've been doing the option trading in itself?
Options. So once I learned how to options trade, then naturally I went to kind of a paper platform or a demo platform where you're not trading real money, and they basically allow you $100,000 to just kind of play around with.
Okay, $100,000.
$100,000. Yeah,
Okay.
fake dollars.
Right. Okay.
So playing around with that, you then get to use what you've learned and say, well, how do I actually do this?
Yeah.
So take some trades, try some things out.
Yeah.
So I did that for a while. It did take a few years for it to really gel because this is deep level stuff that you're learning. So it's not, not something you're going to master just right out of the gate. But so by about 3 to 4 years ago, I was to the point where I was able to make trades very successfully. And I would say with ease, without, having to stress or think too much about it. That was the level of kind of practice and efficiency that I'd gotten to.
That's sort of contrary to what you often hear, and I'm not sure if it's a myth or the reality. People find it very stressful.
I think it's stressful if you, for two reasons probably. One, if you don't know what you're doing, and that's a little bit more obvious. But another stress point could be putting too much pressure on yourself in that this needs to go a certain way.
Okay.
Where that's not realistic.
Yeah.
I think we need to, like with anything in life, we need to set realistic goals for ourselves.
Yeah.
And one of the best ways I think that you can move forward in trading successfully is to start small. And a lot of that has to do with risk management. So let's say you have $1,000 to trade.
Yeah.
If you've never traded before, my recommendation is not that you put all that $1,000 in there.
Yeah.
Because
that's obviously sensible.
It's sensible.
Yeah.
But what happens is a lot of people, especially when they get excited, is they will say, I can do this. And so if you look at my journey, I did take the courses. I learned how to do it. I got excited. And being excited is great, but it can also be a pitfall. Because when that excitement kicks in, so there's two dangers or two things to watch out with trading. One is fear, and the other is excitement. Either of these can cause you to make very quick moves. So when you get excited, you tend to want to go all in. So you might tend to want to take that $1,000 and put all of it in. Yeah. So that can create stress. Yeah. Because now it has to work. Right. You have everything on the line. If it doesn't work, obviously all of that investment money is gone. So what I would say is take 10% of that, then go all in with that 10%, and know you're going to lose it. You're going to lose it for sure.
Do people know they're going to lose?
I think that's the problem, is they don't know. They actually have sort of a deception thing going on where they believe that I can do this. And I don't think that believing you can do it is the problem. I think the lack of experience, because there's a subtlety, there's a lot of fine points that you won't discover until you're in it, until you're actually doing the trades. So these are things you have to actually just work through. You have to just do it. Yeah. And so doing it with that 100% is to me, it's foolish.
So I think that's a very prudent sort of way to look at it.
Right.
And maybe the inexperience in some people doing this They just look at the excitement, as you just mentioned. But there seem to be similarities between this and gambling, or this and gaming.
Yeah, so I think the difference between trading and gambling, for example, is with gambling, you don't actually have any power over the outcome. You're looking at a possible outcome over which you have no control.
Yeah.
Now, when you're just trading stocks, for example, that's kind of a similar truth. However, with options, and this is one of the reasons why I like options, is because if you buy fire insurance on a home, that insurance contract is going to have no force whatsoever on whether or not the house is going to burn down.
Yeah.
But when I buy an options contract, I'm actually buying into what I would call pressure or magnetism on the underlying itself.
Okay.
Meaning, if I buy enough option contracts on that underlying, whether it's SPY, QQQ, or in any of the indices or major stocks that are traded out there, that option position actually does have an effect on the movement of price.
Right.
And we saw this with GameStop, for example, with the short squeeze.
Yeah.
Well, it started
They
as
made a movie
squeeze.
about that.
They did.
The dumb
They did.
The dumb
yeah,
money.
the dumb money.
The
Yeah,
dumb money. Right. Yeah.
Yeah, it was a great movie. And so what happened there was this kind of frenzy started with the short squeeze. You know, a guy realized that people weren't really paying attention. They were just kind of doing business as usual. And he said, no, I think there's something to this. So he obviously then he has kind of a following with the internet crowd and got more people involved in that. And so it started out with buying stocks, but what people started to realize is, hey, you can purchase these things called call options. Yeah. And so they started buying when they started buying call options is when it started to really get crazy. And I don't want to get too detailed about how the market works, but I will say there are market makers who are on the other side of every trade, and their primary job is to provide liquidity to markets. Yeah. So when you take a trade, you actually force a market maker to then re-hedge their position. And so when you're trading that far out of the money, in a call option scenario, you're actually forcing market makers to move their position higher and higher. And so it's called the gamma squeeze. Right. And so this actually forced the GameStop price much higher. So this is an example of how taking an option trade, even a large position, or especially a large position, will actually move the underlying stock.
Why do you do what you do?
Why do I do it? Well, so this is back to the time freedom. So I want to be able to say when I work, where I work. I love to travel. My wife and I love to travel. So if I'm, in a job, in a corporate setting, again, nothing wrong with that. I've been in many of those. But they don't afford me the ability to just say, hey, let's go to France for a month, or let's go to Taiwan for, a month or 3 months or whatever. I don't get to do that. But with trading, I can make my own schedule. I can get up when I want. I can take a day off. There's no one's going to say anything about it. Yeah.
And in that, obviously, you want to buy a time back. You want to have that freedom. But when you are actually sat at your computer trading, how long do you do that for? A day, per day? Would you say?
Well, it doesn't actually take a lot of time, and the reason for that is it's more about the setup. So when you set yourself up correctly in a trade, it doesn't take a lot of management. It really doesn't require a lot of time. In fact, I probably spend maybe 10 to 15 minutes, up to an hour, depending on if I'm checking things. Right. But it wouldn't take me more than 10 to 15 minutes to take a trade or reset a trade. Okay. Meaning set up a new trade for the next day. Yeah. That doesn't take very long.
So is it because it's all automated? Because you've developed your own software.
So I took the skill of being a software engineer, which was my career for 20 years. Yeah. I did take that skill, and so what I've done is I've leveraged an API that I pull in stock data from.
What is an API?
Oh, sorry. An API is it's application programming interface, and what it does is it allows you to extract data from a database. Okay. So some company will expose an API that just allows a programmer to write code and retrieve data.
Yeah.
So I retrieve data from some API that provides options data. I pull that in, and then I use the math behind options pricing to help me determine what the total market exposure is. And why I'm interested in that is because if I can determine the market exposure, I know what the market makers are likely to be forced to do, to go one direction or the other.
Right.
That helps me determine where I will take a position.
Right. And when you say market maker, you're referring to sort of the hedge fund managers in big corporate firms? Or
so
people deciding...
Hedge fund managers are actually still participants. So, the participants in the market are going to be retail traders,
Right.
like myself.
Yeah.
Then you're going to have hedge funds, or what you call professional traders.
Yeah.
Broker dealers are companies like brokerages who provide access to the markets.
Right.
They also will sometimes take trades. So all of these players are people who have exposure in the market, meaning they have a position.
Okay.
The thing about market makers is by law, actually, they cannot have a position, which means they have to remain neutral.
Right.
So their whole reason for existence is to provide liquidity to other traders.
Yeah.
Now, why is this important? Because prior to 1970, if you were a market participant, you came to the market, you needed to find another market participant to take the other side of your trade, whatever kind of trade. Maybe you wanted to sell a stock or an option, maybe you wanted to buy. If you wanted to buy, you needed to find someone willing to sell, and vice versa. So people got smart and said, well, hold on, let's allow people to go in and just be on the other side of the trade. And so some rules started to emerge around that where they realized, well, if they're going to do that, they need to just do that. So these guys can't be, these market makers can't be directional or positional.
Yeah.
So that forces them then to continuously hedge, because every time they take a new position, they have to re-hedge so that they remain neutral. So this re-hedging then, if you pay attention to the market flow, you can actually determine with some accuracy where price is going to go.
Yeah.
And it's not where it's just going to go, it's where it has to go.
It sounds like a game.
Yeah.
It
feels like a game.
It feels like a game.
Yeah.
What game are you playing?
I think the game most particularly is, I don't know what you would call it. I think it's, I want to say winning, but that would be the case with every game. I think the game is just making money. It's a financial game. Yeah.
And when that success comes, then what else?
Yeah, so obviously there has to be a purpose behind it all, because I think a lot of folks out there who either are wealthy or want to be wealthy, I think the end game is just that they want to be wealthy, and I think that is sort of a low bar, honestly, to set for yourself.
Yeah.
And the reason for that is because, look, our lives are just not about ourselves only. I think we were put here on the earth to serve others. And I believe that money is a tool. I don't think that it's something that we should use to be concerned about having. I think it's ultimately it's about being. Who are you being? But in the being, there has to be like a methodology, or like I said, money is a tool. So let's say I wanted to help the homeless, which we've done before. The more money I have, realizing that money is actually a tool, then allows me to be more effective at that. Bigger things open up for me in terms of what's available. Rather than just going to the grocery store, buying some groceries, wheeling it down to areas where I know there are homeless people. I can start to get other people involved. Maybe I can start to contract with a grocery store. Maybe I can start to hire people. Maybe I can buy some trucks or rent out a space. Maybe I rent a kitchen. More things become available.
Do you care too much?
Do I care too much?
Because the reason why I asked that is in that particular industry, people don't really care. And it seems like you care.
Yeah, I don't think that caring equates to caring too much. I think that I've said this before. I think that the real pandemic, and it's not limited to a period of time. I think it's ongoing.
Right.
Is selfishness. I think that people are.
It's what selfishness.
Selfishness, and I think how that plays out is that I think people don't even realize the level of selfishness within which they're operating constantly. I think there's a mentality that says, I need to take care of myself. Mm-hmm. And there's nothing wrong with that. I think that's fine. But I think that when the concern is for others also, there's a reciprocation that takes place where you also are taken care of.
Yeah.
And I think it's not just about, your physical needs being met, but I think it's about a sense of purpose, meaning, and even joy.
Yeah.
There's a lot of joy in being able to expend your energy to help others.
I don't know many traders, but if I knew any trader, I think that would be the last on their mind about winning to serve others.
Sure.
I think I wouldn't go as far as saying they don't have a purpose for doing it, because obviously that's very personal. But I think less of them would say what you're saying.
Certainly. I don't think that's limited to traders. I think that's actually probably a commonality amongst people of many different disciplines. And I think especially when you're talking about the kinds of disciplines that have the ability to earn lots of money, I think this is common to see, what can I amass for myself? What kind of legacy can I leave? And I think those things are great. It's great to leave a legacy. But when it becomes about how much you can have, how many toys you can have, how much fame you can acquire for yourself, I feel like that's moving a little more in the direction of ultimately kind of meaninglessness.
Meaninglessness.
Maybe lack of purpose.
Lack of purpose.
Yeah.
I'm just having this lingering feeling of, what are you becoming?
What am I becoming?
When you trade? Or is it important for people to look at themselves as what they're becoming as they trade? Okay, so that's great. So when I hear the word becoming, then I go immediately to thinking about being. Who am I being? Now, when I show up to the market, here's something I discovered about myself is like a way of being. And I think this created a breakthrough for me. So what I discovered that I had been doing, and I didn't even realize I was doing this, but I was actually showing up to the market as a greedy participant. Greed can show up in different ways. The way greed was showing up for me was, so greed and fear are kind of two sides of the same coin. So when you show up to the market and you have sort of almost a desperation, like you have to win, again, this is sort of linked with like putting all the money on the table, right? Because you have to. You talked about stress earlier. I think this is a big stress creator. Another stress creator is showing up to the market with this mentality that if I don't win, something's wrong, right? Okay.
Or another way to say that is sort of being obsessed with losing. So nobody's going to say this. Nobody's going to own up to or admit this, but a lot of people show up to the market thinking about losing. I don't want to lose. So what I realized one day, it's like, well, hold on. Let's play out this scenario. So I want to win.
Yeah.
What if I won all the time? What if I won every trade that I ever took?
But isn't that what everybody wants?
It is, but let's play out that scenario. So let's say I can't lose. Let's just, hypothetical scenario.
Yeah.
I can't lose ever.
Yeah.
What's going to happen in a short time is my account's going to start to grow, obviously. And if that keeps going, it's going to grow bigger. Eventually, when I enter the market to take a trade, now I'm actually trading theoretically against larger firms, larger institutions.
Yeah.
Now, remember, I can't lose, which means they can't win. Eventually, what will happen, if I can never lose, is I will actually force every other participant out of the market,
Right.
no matter how large or small they are.
Yeah.
And then what happens is the very thing that I love so much, which is trading, I've now shut down. So playing out that scenario, then it becomes very ridiculous. Like, I really wouldn't want to win all the time.
Yeah.
So if I back off from that a little bit and say, well, what is a fair balance? What does it look like to have a fair, balanced perspective on that?
Yeah.
And I think what it is to embrace winning, obviously, but to also find a way to embrace when I don't win. And I think the way to do that, the access to that, is to consider someone else is on the other side of that trade. So if I never want them to win, which means I've got to win all the time, I'm actually being greedy. But if I can flip that coin, flip that paradigm and say, well, I didn't win this time, but somebody else did. I think what it does is it starts to make the market that I'm approaching or that I'm entering into every day to trade a more friendly place. It's not a greedy place anymore. It's not a place that I go into with this sort of sharky mentality. It's more of a place of camaraderie. I have fellow traders now. Maybe it's my time to win, maybe it's their time to win. Now, I'm not being so altruistic that I want to just give everything away. Obviously, I want to win more than I lose.
Yeah.
But it's about the perspective and really who I'm being. If I'm being a generous person, willing to give and take here and there and not needing for it to work. Because look, winning all the time is just it's not realistic. And if in my mind I'm trying to force that onto the market, I'm not being a very friendly participant myself. So how can I expect others to be friendly when I'm not being that way? So I think what I've done is I've figured out a way to show up to the market being friendly and seeing others in the market as friendly by being generous and willing to give.
Is the market friendly?
I think the market is, ultimately the market is how you show up to it. I don't think the market is one way or the other by definition.
Right.
Now, I do believe that there are a lot of people out there who believe, things about the market like, well, it's not friendly or it's a greedy place to be. Sure, that sentiment and mentality is out there. But I really truly believe that the market is the way you show up to it.
How do you show up to it?
Well, that's what I'm saying is I believe that I'm able to take ownership of my participation in the market by being responsible for how I show up to it, which is now playing out the ridiculous scenario of what does it look like to win all the time, and that ultimately that would be shutting down the market. Well, I don't want to do that. So now I'm willing to share is really what it comes down to, is being willing to share. So then what I'm freed from then is the stress, the worry, the fear. Because if I'm always showing up to the market worried about losing, it's a stressful time.
Yeah.
But if I can release that, if I can let go of that, and let's say I don't win a trade, I'm okay with it. I'm okay. It's not a big deal. It wasn't my time to win, it was someone else's time. Wonderful.
That's a very different but also interesting perspective. I rarely hear people refer to market as the way you were referring it to.
And so what I think that does is it then frees me up, because a lot of energy can get consumed, as you said, by stress, by worry, by sort of thinking about losing a lot, but not being really honest about that. And trying to prevent it from happening. But if you can release that, if you can just let all that go, all of that energy frees up to then focus on strategy. And so that's where it comes back to, I do want to win more than I don't. I want to win more than I lose. And so if I can be freed up to completely focus on strategy, I can push that edge further. And that's what you always want to have as a trader in the market. You want to have an edge.
Yeah.
And that's really binary. You either do have an edge or you don't.
Or you don't.
And if you don't have an edge, really that's defined as you are winning less than you're winning less.
You're losing less.
You're losing more than you're winning.
Than you're winning.
Right. That's not having an edge. Having an edge is you're winning more than you're losing. It's actually quite binary.
Do people talk about losing?
I don't I think that's the honesty part. I think that's what's missing. I don't think that people want to talk about that. It's just not glamorous. I don't think people see the value. And there are people who you'll see traders with YouTube channels and things, and they'll expose, just because they want to be transparent and they don't want to lose everyone, to say, oh yeah, I lost this trade. I think that's wonderful. But I think what I'm learning is you can either focus on the losing side or you can focus on the winning side. So how do
Right.
you do that? If you're looking at just winning and sort of factoring out the losing side of it, then you're saying someone else won this time. Oh, I won this time. No, someone else won instead of I lost. Then your focus goes off of losing at all. And I think that's where it does become more friendly, because a place where a lot of winning is happening, that feels like a friendly place. That feels like a positive place to be. But avoiding losing sort of gravitates your mind towards losing. And it's just this weird, tricky thing that kind of happens. And if whatever you focus on is what you tend to gravitate towards.
Yeah. Yeah. What's in it for you?
What's in it for me? Well, obviously money, but I think it's more than just that. I think there's a sense of satisfaction. And, you know, I worked a job for a long time, 20 years. And I was in the Marine Corps before that. And there's a lot of satisfaction from working. I've always enjoyed that. But I think there is also a thrill behind, you know, even just the simplicity of winning, even a single trade. There's always a thrill behind that. That's never going to go away. But I think bigger than that, there's a sense of accomplishment of making something difficult work, like figuring it out. And then beyond that, you know, what can you do with that? Well, I talked about that a little bit, just being of service, just being able to enjoy life, you know, having things you couldn't otherwise have. The time freedom is one thing, but also just, you know, you want to pick up and go travel. You want to having the ability to buy things that, you know, maybe wouldn't otherwise be accessible, that just doesn't make financial sense to purchase.
Yeah. And if another person was sat here listening, you know, who knows nothing about trading and hearing us, how would you say, or how would you advise they approach trading or options trading?
Yeah, absolutely. Well, I talked about that a little bit earlier. I think the thing is when you're trading, you really need to kind of recognize, where are you? Be honest. You know, if you don't know anything, you don't know anything. And obviously,
and that's the starting point. Yeah.
Right. Now, if you have some experience, great. But I think the number one thing and the most important thing is going to be risk management. So that's where I talked about, if you've got $1,000, or even if you've saved up more money, let's say you have 100,000, you have $1 million, but you don't have any experience, and something's driving you. You know you need to do this, or you just really want to do this. Again, I would say take a portion of that, take a small portion of that, put it in, use it to learn. Know you're going to lose all of it. That's a fact. It's just a fact. You're going to lose all of it, and learn off of that. Enjoy it. Allow yourself the ability to fail, but fail wisely, meaning fail within a wise parameter.
Yeah.
And so I think, 10%, 5%, something. It depends on what you're trading. I would say maybe 5 to 10% for options, and go lower for futures, like 1%.
Right.
But allow yourself that chance to fail, because as you fail and you don't give up. See, there's a saying out there in the world that doing the same thing over and over and expecting a different result is insanity.
I don't believe it entirely.
I think that definition is insanity. I think the truth is, doing the same thing over and over and expecting a different result is actually called persistence.
Okay.
Because it's not actually possible to do the same thing over and over the exact same way. It's just like a fingerprint. Yeah. Every effort is like a fingerprint. It's we have not that level of ability to control every parameter. Even if we try our best to set things up exactly the same every time, the stars are moving. Things are different.
Yeah.
You can't replicate.
Not everything will align.
No, it's not possible.
Yeah. And it's like learning to play the tennis. I think we talked about that. And okay, so you're in a court, and there's a nice sunny day. Wind speed might be perfect, and you try maybe 100 serves.
Right.
You practice that. The tension in your racket might get loose after a while. So the first shot is not going to be the same thing as the 100th. Right. Right. The wind might pick up. Yeah. Also, the thing might come into play.
Yeah, the sun, as you said, the sun's shining. The wind might be blowing a bit differently. Yeah. Maybe you got a good night's sleep the night before. The next day you didn't. It could be anything. I feel like, and I want to be too like conspiratorial, but I do feel like there may be some forces out there that are trying to convince us not to keep trying. Because I think when we do keep trying at something we haven't yet gotten good at or mastered, the more we try, the more we learn. And this is what I've learned with trading. The subtleties and the fine points are so granular that you can getting that exact right strategy is like balancing a knife's edge. It takes so much fine tuning.
Yeah.
But once you hit it, it works every time.
Yeah.
It's so powerful. But you don't arrive at that without doing the same thing over and over again.
Yeah.
And expecting a different result.
What's next for Kerry Jones?
What's
next?
Well, I think what's next is being able to I think what's next is like I said, looking at different levels of service. You know, my wife and I have already, you know, in our conversations with each other, we've determined that serving people is what we really want to do. Now, I don't know if that looks like mission work. I don't typically like the kind of traditional paradigm of mission work where you are sent out by a church, you receive sponsorship and the funds come in. I feel more like self-sponsorship, which is why another reason I think trading is appealing, because I can do that.
Yeah.
That would allow me to.
And I guess that feeds into the purpose. You know, you do this with purpose outside of just making money.
Right.
Yeah.
Right. You know, one thing we've been doing lately is prayer walks, and just seeing the outcome of these prayer walks. You know, and it seems like a simple thing to do, but it actually takes time and it takes energy.
Yeah.
And so, if I was working a full, you know, 9-to-5 job, full-time 9-to-5 job, it would be much more difficult for me to muster up the energy and even find the time.
Finding the time,
you got 4 hours at the end of each day, you've got the weekends, but that time gets filled up quickly. Definitely amp up your stress level. So again, not focusing on losing or trying not to lose. And when you do lose, you don't win a trade, that you can be happy. It's an exercise. This is not our nature.
Yeah.
But to take that exercise on, hey, someone else won today.
Yeah.
Someone else won that trade, and be happy for them. Rejoice for them. That will bring your stress level way down. And I think then, like I said, it takes it off the table, the being part of trading, and allows you to focus on the strategy, you know, the actual mechanics of it.
Yeah. What are some of the dark side of trading?
Well, I think the darkest side shows up when there's greed and fear. Again, greed and fear are opposite sides of the same coin. You know, when the market does these crazy moves, if they're really crazy, we tend to call those black swan events, where the market just like crashes.
Yeah. That's something similar to what happened in 2008, 2009.
Yeah. So there's a saying in investing that says the bull goes up the stairs and the bear goes out the window. And what that means is, so bear obviously means being bearish in the sense of an upward bias. You know, you believe the market's going up. The bull is the opposite of that. You believe the market's going down. So this is speaking to bias. The bear going up the stairs means typically when prices move up, they march a bit slower. But when they go down, they tend to go down quickly.
Yeah.
And I think the reason for that is that people tend to react out of fear faster than they react out of excitement. So excitement can definitely engender quick reactions, but they tend to be more measured. So even when people are excited, they still tend to have a bit of caution. So they will take trades, but not so quickly. But when people are afraid, oh, it's fast. It's lightning fast. And that's why markets will tend to crash like that. And some of that has to do with, market maker positions and hedging and all this. But I do believe that's the reason. So the dark side of trading is, I think it is greed. I think it's greed and fear. And I think it really stems from not having a generous mindset, from this me mentality. I got to get mine. I got to take what I can get.
Yeah.
I think that's really the essence of the dark side of it. And there are other things like, in the United States, I think we do need a bit of an overhaul of systems like the SEC,
Right.
and I believe that's coming. However, there are a lot of rules in place that protect people, that protect traders. There are some foreign accounts that you can open up,
Right.
and what happens is you can do very well at trading. You can run up your balance, and then when you go to withdraw, they're going to say, "Oh, there's some mistake," So that can be something to watch out for. Just paying attention to what markets you get into.
Right.
How much oversight there is. That can be important. So, yeah, again, greed.
Yeah.
People, when there's not well-defined rules to follow, people will take advantage of that.
Yeah.
They tend to.
Yeah. Well, thank you, Kerry.
Yeah.
It's been insightful. It's been a lot of knowledge that you've shared there. And I think what I've taken from this is the philosophy
Yeah.
on what you are being when you're trading. And that's, for me, it's different. It's important for people to actually maybe realize that it's not always about winning.
Right.
And I think I share that sentiment with you. Unfortunately, we live in a world where people don't really like to lose.
Right.
And it becomes not so nice world to live in. But hopefully one day that would change, and people would appreciate losing the same way they appreciate winning. So thank you, and thank you for joining Bite Size Chat.
Thank you, Ernest. Thanks for having me.
Thank you. Really enjoyed it. Well, I really enjoyed that conversation, and I hope you did too. If you did, don't forget to follow us on Instagram, subscribe to our YouTube channel, and more importantly, share this message so people can also enjoy it. Thank you for joining Bite Size Chat.